Hi, I'm Lee Stone, and this is your UFX Bank Week in Review. Today, we will be covering some of the major financial events of the past week and how they impact the global currency markets. But before we begin, let's cover the last week's risers and fallers. The Euro-US dollar pair fell nearly 4% on the week to close at 127.52. The British pound had a sharp drop against the dollar as well, falling 2.2% from 159.40 at the opening of the week to close at 155.92. The US dollar finally made gains on the Japanese yen, rising 0.8% on the week. It opened at 85.53 and closed the week at 86.21. After a poor showing last week, the US-Canadian dollar pair rose 1.4% to close the week at 104.17. Oil slid 6.6% on the week, last trading at $75.39, while gold saw a nearly 1% increase to close the week at $1,214.90. In news this week, the dollar index broke its largest stretch of weekly losses since 2004. The surging dollar gave way to declines in European markets as confidence in the economic recovery is beginning to erode. Asian markets and currencies also declined this week, led by the Indian rupee and Korean won, the latter of which falling nearly 3%. For more on these events, let's turn now to our analyst, Martin Smith. Martin, how are you?
Very well, thank you, Lee.
So let's talk about the dollar. What's happening here?
Well, it's quite simple, really. A few weeks ago, we discussed how when the US stock markets decline, the dollar goes up. That's exactly what happened this week. Poor retail sales coming on the heels of the previous week's jobs report had a significant impact on the markets. The Dow Jones and the Nasdaq took heavy losses on the week. The Dow fell 3.3%, while the Nasdaq dropped over 5% in last week's trading. The risk appetite we were seeing in the weeks before seems to have dramatically decreased. Now, this triggered a selling off of risky assets and in turn, of course, increased purchase of the dollar. So it seems that the fears of a slowing economic recovery are becoming a reality, and this is having dramatic effects on world economies.
Well, I assume then that this is what has been affecting the Asian economies.
Exactly. Since nearly every Asian economy is export-driven, the slowing US economy has a major impact on them. This news, coupled with reports out of China and India, that both economies produced the smallest gains in industrial output in nearly a year, heightened economic concerns throughout Asia. Now, the Japanese yen, which we discussed, if you remember, in last week's segment, touched 15-year highs, but fell slightly short against the dollar. Barclays PLC cut their forecast on the dollar, predicting that the US dollar will weaken to 83 yen on the dollar in the next month. There is also wide growing speculation that the Japanese government may intervene to curb appreciation, though government representatives have dismissed this suggestion. Still, they are carefully watching the situation and its effects on the Nikkei. The results of this week will likely have an impact on how the government might react.
So why was the euro affected so significantly?
Well, it seems that the sovereign debt crisis is creeping back into focus again. The Greek economy receded 1.5% this last quarter, while Spain's economy increased by only 0.2%. So really, Germany is driving the Eurozone's economy as other nations seem to be stumbling. Germany's GDP surged 2.2% from first quarter gains. But this positive news out of Europe may not be enough to offset the reigning pessimism among European economists. So all in all, the outlook is a bit uncertain, and we'll have to wait and see how the markets react when the trading gates open.
Okay, well, let's go now to our Ask the Broker segment. Jean-Pierre Dumont of Toulouse, France, writes, do you recommend using moving averages in Forex trading strategies?
Well, in short, I would say yes. Using moving averages in day trading can be a very useful strategy. There are three types of moving averages you will likely hear about. There's the simple, exponential, and linear. Essentially, using moving averages can help us determine trends for whatever it is we're trading. They can also help us in seeing support and resistance lines. Now, you'll find that there are many different trading strategies associated with moving averages. An example of one would be a crossing strategy, whereby a trader determines his buy or sell position when a short-term moving average crosses through a long-term moving average. Now, in this case, a buy signal is generated when the short-term average crosses above the long-term average, while a sell signal is triggered by a short-term average crossing below a long-term average. Some might find using moving averages very useful in trading strategies they already employ. However, I don't want your viewers to believe that this is in some way a lock for market predictions. Rather, it's a helpful indicator that many traders use in technical Forex analysis, and it assists them in making their trading decisions. Most experienced traders don't rely on one indicator or source of information. They tend to use a collection of resources and indicators to make well-calculated decisions. So I'd say in conclusion, I would say if you are not aware of how moving averages work, it would be advised to learn about them and then decide if it will be useful to you in your trading decisions.
Well, once again, thank you very much, Martin.
Okay.
We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your own questions to our weekly broadcasts, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.